What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. Productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year we look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. If you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. Next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else. And they come to an end.
I mean, that's a greater fool theory. That's what you're saying?
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow. And it's wonderful because it does create a rising price, does create more buyers, and people think, I've got to get in on this. And it's better if they don't understand it. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But you can have anything you want to imagine. If you just look at something and say, that's magic. You can do it with shark's teeth or seashells or anything. And, they did it with tulips in 17th century. And they'll do it again. People, they like to speculate. They like to gamble. And if you can get something, particularly if you have something half plausible going on. Mm-hmm. If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country and, so let's put our assets in gold. You would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, somebody calls that a store of value. I mean, I think they're delusionary.
Andrew has a question too. Andrew.
Hey, Warren, related to this issue of Bitcoin, you saw that Goldman Sachs just last week announced that they were going to create a trading operation around cryptocurrencies and Bitcoin in particular. You've been an investor in Goldman. What do you think of their decision to do that?
Well, they probably think that lots of people are going to get very excited about it. Maybe already are, but that they think there's money to be made trading them. I don't think they're expressing an opinion on the ultimate value. I would be very surprised if the top partners are selling their Goldman stock and putting it into Bitcoin. I want to cover this subject now because my friend Charlie will come on at 8 o'clock and he'll tell him what he will say.
Well, that's my whole entire point. I do want to ask Charlie about it because I think when he talked about the turds, he was referring to this. He said if you're trading this, it's like watching other people trading turds and deciding you want to get a piece of that.
Well, you're not going to get me to comment on that.
Hopefully Charlie's not awake and not watching right now.
Well, the truth is people do trade on very crazy things over time. Imagine people selling their homes to buy a tulip in Amsterdam. If people think they're going to make money the next day, and worse yet, if they think somebody else that they know is going to make money and they aren't going to make money, it just draws people in. I could whisper something on this program, and kind of the more sillier it was, the more it might react, because there's no quantitative limits. If you buy a stock, you say, well, I'll buy it at 15 times earnings, but I won't buy it at 20 times earnings. But when you get into something that doesn't produce anything, there's no checkpoints. There's nothing to reference it to.
There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short. And nobody wants their windpipe stepped on. And I don't blame them. I don't like people who step on my windpipe. But I would say this. If the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay me, it's this bargain price, $25 billion. I'll write you a check this afternoon, 25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be, another 25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, they have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. If I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. So if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? Why don't you call it Buffett coin? Make your own or something. What? Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. That explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. It's other people have entered the room and they move money around, but there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. You forget the numbers or forget the equation. You can do that with a lot of things. It's been done throughout history. Certain things have value that produce something tangible. You can say a great painting, probably will have some value 500 years from now. The odds are pretty good. If somebody wants to sell you a pyramid or something and you can charge the viewers, it'll be around a long time. It won't produce anything, but people will find it interesting to go there because they've read about the pyramids. But basically, assets, to have value, they have to deliver something to somebody, and there's only one currency that's acceptable. We can come up with all kinds of things. We can put out Berkshire coins, or we can put out Berkshire money or anything like that. In the end, this is money, and there's no reason in the world, the United States government, whose currency people prefer. There's just under 2.3 trillion just of these little pieces of paper floating around some places, 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But it's the only thing that's money. Anybody that thinks the United States is going to change to where they let Berkshire money replace theirs, is out of their mind. So anyway, with those few deficiencies, whether it goes up or down in the next year or 5 years, 10 years, I don't know. The one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it, and people have attached magics to lots of things. The gold on Wall Street. We are not an insurance company, we're a tech company. Well, they're an insurance company, but a dozen people or so have raised a lot of money. They just don't pay any attention to the fact that we sell insurance. We are a tech company. Well, in the end, they wrote insurance, and overwhelmingly, they've lost a lot of money since then. They make up things that work well and getting money from other people.
Did you enjoy the video? Please let us know by smashing the like button and subscribing for more videos about investing. While you're still here, you can check out another video of Warren Buffett as well as Robert Kiyosaki if you have time. Thanks again for watching, and remember to keep this investing tips a secret.